All right, Fishers. This one's mine, and I'm telling you, Fishers has come back. I mean, a year ago, we were like, stay away from Fishers. Boy, was that a mistake, man! If we knew the ordinance was coming, man,
Right.
you would scoop up properties as quick as possible a year ago. But anyway, let's get into some of the data here and see if the sentiment that we were talking about on the front end of the podcast rings to be true. All right, number of active homes. You've got 136 active homes, which is up over 25%. Average rental price at 2,300, which is down. So I mean, it's only down 0.25%, but it's down over month. Average days on market is ticking up 30, a very, very healthy 35. Average price per square foot at $1. You've got your apartments there and your condos. Let's go over apartments here. 36 apartments on the market at $1,783, $1.58 per square foot. And your condos there, 18, 23.45, 44 of those, 44 average days on the market, 18 of them on the market, 44 average days. But that's at $1.03 average price per square foot. Some of my favorite graphs here is where you can track them over time there in the bottom. So single family homes, we see that uptick here in September. We got our sneak peek into September, so don't believe everything you see there with that dramatic upturn, but it definitely looks stable, and it looks like it's staying pretty consistent with last year's trend. So maybe seasonality is more of a thing than I thought. So your average rental price. Let's see if it remains around 2,300 or if it'll continue to slightly tick down due to saturation. Fishers is probably not the market where you're going to have a saturation issue, though.
No, especially with the rental cap going into effect. But just on seasonality, take a look at 2024. So that's kind of a typical graph, right? But look at the difference in price. And we talk about this all the time, but this is August data. We're in September. Still pretty warm out, but prices are going to continue to go down for the next 3 to 4 months, and it's pretty predictable. And look at the difference between January and what is that, June? So January is roughly 2,040, I think, and then it peaks in June at 2,400. I mean, that is a huge price difference. So get on that spring and summer cycle. If you have a vacancy now, do what you need to do to get that filled. Do an 8-month lease, do a 9-month lease. But you really want to try to be in that May, June, and July cycle, if at all possible, because I mean, according to this graph, it can mean the difference between $360 a month, and that's huge.
Beautiful advice. Yes, beautiful advice. You're looking at a 16-month, 18-month lease is what you're looking at if you're signing one this time of year. 100%. Yes. So hopefully you're working with a property management company who's advising that, which is funny because obviously this time of year, those are the conversations I'm having with new inquiries, is look, no matter who you go with, those are the type of leases that you should be looking at. And it just this week alone, one that immediately comes to mind, but maybe even a couple, but one immediately was like their property manager advised against that. I won't, I know, right? I know, it was mind blowing. I have no idea what would lead them to suggest against that. I don't know if it was fee related. I don't know what it was, but and I don't want to disclose who it was, but it's they advised against that. So working with the right property management company can make the difference. And this is, so here we go again, right? So this is why you should not just base it off of 8% versus 9%. Yeah. You're crazy if you're doing that. You're crazy.
Well, this is why we do this podcast. It's like, well, I don't. If you get conflicting information, we're just giving you the information to make an educated decision. Bingo. You can choose yourself what to believe, but I'm showing you here in this graph that it's going to make a $360 a month difference if you sign a lease in June versus sign a lease in January. Yeah. So you can derive from that what you want.
Exactly. Yeah, exactly. We're just relaying the information, and hopefully you're working with somebody who knows how to interpret that information so that they can maximize. Because honestly, this is selfish here too. That $300 a month, our monthly fee is percentage based. Yeah. We want to achieve that higher monthly rent too. So, I mean, although it does generate a higher return for you, it generates a higher return for us. So
it's a win-win.
Anyway, you want to be working with a property manager who knows how to interpret. Number one, is aware of this data, let alone knows how to interpret it so that it results in the highest ROI. All right, this is the rental market update, not the individual segment part of the podcast.
we got a little sidetracked again.
I know. All right, here we go. Let's get into the sales information for August 2025 in the Fishers market. All right. Your average days on market, it's ticking up. Here it is. It's ticking up. I mean, it's 25, right? So
25,
it's like, who cares? It ticked up like 2 days, which resulted in 31%.
Yeah, exactly.
So your average days on market's at 25. Month over month, you're up 31.5%. But that's nothing. This is a crazy good market, and I know that there are people picking up properties as quick as they possibly can in this market. Average price per square foot at $188, which is ticking down. Your average sales price, this is shocking. It's down month over month. So I mean, this is exactly the market sentiment that we were talking about. We're only in market report number 2, but we're seeing it, right? We're seeing it. Indianapolis and Fishers is seeing it. Okay, home sold 121, which is up month over month. So it's weird. It's weird. Average sales price over time. You can kind of check out that graph. You can see what was happening last year versus this year, which is awesome data. But one of our favorite parts of this entire graph is the bottom right-hand corner where you're talking about the number of homes sold and the price points in which you can enter that market. And again, this is we only track homes that sell for $500,000 or less because there's very likely not to be any investor who's looking at throwing over $500,000 in any investment type property. So you can see where you can still go to the Fishers market. Still 126 sold between $250,000 and $300,000, which I think is the sweet spot of this market if you can find a good property. So that's our Fishers market update. Mike, you want to chime in on any of the sales information?
Not too much, other than just a little caveat on the sales price over time and the. You had to throw a jab in there about the month over month average sales price. I will say, July had a little bit of a blip. If you look at the trend line, it's still going up. So there was I will give it to you. There is a month over month, but the trend line
darn right there is
up from the beginning of the year. Okay,
the ceiling is falling. All right, let's get into the next one. Here we go.